All righty. Volatility index, we can do that. Let's go over to that. Let's close that. And let's go to the volatility index instamatically. I like that. I like that someone comes up with something. That sounds good. So, hey Janos, hey Metho, and hey Robin. Hey, I'm a monkey. Let's see. Let's go with the VIX. I don't think we've looked at it on have we looked at it on here? On the new platform? Let's see. I don't think so. VIX. Let's see. Is it USD VIX? Maybe it's USD. USD VIX, maybe? VIX. Nothing there. What's the symbol on it? On oh, there it is. Vol.idx. Okay, vol. Let's try that again. Vol. Dot. Yeah, look at that. It does it instantly for me. Cool. There's a couple vols there too, isn't there? There it is right there. And trading at 21 makes sense to me. And I wanted to put it up on my system too. Let's see. To Chicago Quant system. Let's see. Open workspace. Right there. This is my favorite one right here. I like that the most. I keep it clean. It's my weekend one, you know. I send that over on the weekend chart. There it is. And then let's move that over to here. Move that over to there. I'm trying to move my tea into the right position so it stays warm. There we go. All right, and you can see here, there's the daily. This has been rolling over. Interesting, isn't it? I think that tries to tell us that there isn't a lot of volatility. Obviously, that's usually a sign of upwardly movement, which that's what we've had, of course. When we go over to the, let's see. Here's the, that's the Dow in December. Here's the Dow now live right here. And when you really look at it, let's see how far back that goes. So I guess, you know, it matches up to right here, you know, going into the weekly sell. Or yeah, I guess that's the weekly sell, but overall the first weekly buy, I don't think this weekly sell is going to survive. That's the thing, is I think that in other words, I don't think they're going to drag it on for much longer. I think that, you know, the markets want to go up, not down. And so the one thing Powell said yesterday in Sweden I thought was really good is Powell came out. Oh, that's right, Robin. I forgot to mention that too. Robin and I were talking about that yesterday. You know, was Powell speaking today? I said in some type of conference, but not officially. It is not the VIX, but a continuous VIX futures contract. That's all right. Either way, it represents it very clearly. And the volatility is dropping, and you can see it on our work too. Let's put VIX up on the Chicago Quant chart also at the same time. But yeah, there it is right there. You know, you can see that long, cute slide. Bang, 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 bang. You know, it's just been falling since, what was that, October? I guess that peak in late September. And that's probably the same thing right there's. Oh, that's December. Let's go to this. Let's go like this. There you go. That's even better. There you are. And there is, where's September at? September's right there. There's that peak. So, you know, that makes total sense to me. I've been watching that, and, you know, I send this out. We've been in a weekly sell now since mid-October, later October, something like that. You know, went into that long sell there for a while, and then it just, you know, every sell has been a nice sell. This is getting sloppy in here, but that's because it's down in the 20s. You know, like 21, 19, 20, 22 area. Not much of a reason to believe that we're going to see much lower than the high teens. Money, right now, money is desperate to be reinvested. They just need some clearer. You know, let's go back to your old videos about the idea of fundamentals. And in the beginning, was it Monday? I think we went on this tirade on fair value. And, fair value and fundamentals have been disconnected. The reality of them has disappeared altogether without rollovers. Sounds good to me. Because that futures contract, remember, the VIX index itself is not exercisable. Only the future, and the futures contract is not really exercisable. The options are not exercisable. They're European options. So in other words, they didn't want, they wanted that flavor. I'm going to call it flavor. That's for those out there. I know I'm speaking evil words. European option, American option, option. The scary words of investment tools that only work in the 21st century with disconnected fundamentals. But who would want to know that? Nobody, obviously. But yeah, that makes total sense. So, the VIX itself is, it's made up of a couple. I got to use those scary words again. Call the in the money, at the money call, the in the money, at the money put, and I think the out of monies. I think they use all 6 options: 3 calls, 3 puts. I'm sorry to use the vulgar, scary words. Don't mean to do it. But the VIX itself is based off of that, and so that's how they define the volatility. And the end result is that it makes sense for the volatility to be drifting like this because there's not really when you really look at the stock indices themselves across the planet. Let's go back to the March Dow 30 indice. Here in October and late September put in a bottom. And then we had those volatility points, which we've posted in boxes that were screaming to us like, oh my God, something big is going to happen. Well, yeah, it came off of the $28,000, $29,000, $20,000 area and ran up to almost the $35,000 area, a $7,000 move. Boy, who else points out those things before they happen? But anyway, that's besides the point. Let's see. So yeah, that doesn't surprise me. Let me read the chat line so I can answer any questions. Because Doc is now in his fantasy land. You start talking. Remember, I'm a volatility trader, so I could go talk about volatility for hours upon hours and how they work. And let me say this to the currency traders: currencies lead the volatility, which is a fascinating thing in its own right. They lead the volatility. All right. Yeah, okay. He is at lunch now. I don't know. I would have to ask the guy in charge of the. Okay, you're answering Metho. Okay, cool. He should do a roll each month with a price adjustment, probably, but I don't think it matters. That is the usual way. Automatic for me, and the reason why I say it doesn't matter is because of the way the future is following the index, which is also derived from the options, which are European, not American, so it has a whole different flavor to it. Next adjust set for 1610. Okay, there we go. All right, so let's see. Okay, you guys are taking apart that, and then there's that Dukascopy Swiss thing. Yeah, it must be okay. Automatic, excellent. Yeah, so when you look at the stock indice, right there, you can see the massive move off of a 29,000 area on the Dow Jones Industrial Average. So, at this point, you've had this $7,000 move or 7,000 point move, up, which is why the VIX is taking it hard on the chin. Because money watches this indice, big money on the planet watches this indice, and at the same time invests in the S&P 500 because it's diversity. The 50% American corporations, 50% global corporations. So, it's a combination of both. That's where the money managers basically tried to use as a benchmark as their what to outperform. If they outperform the S&P 500, let's say the S&P 500 is down 9% for the year, which in the case of this last year was down almost a little more than 18%. Well, if a money manager is only down 16%, Oh my goodness, it looks like Caesar in Rome, back in yesteryear. I mean, they cart them around. They tell them they're freaking geniuses. Oh my God, you only lost 16%. The index lost 18.5%. You should be made king of the universe. That's pretty much how it goes. Honest to God. Honest to God. It blows my mind that they would even think that losing money is an intelligent thing. But then, some sitting here right now could say Doc is out of his freaking mind. But I could really take it even further and go, guess what? Europe has been selling bonds and getting paid for it for a decade. So how far am I out of my mind about the way fundamentals are turned upside down? They don't really define things working correctly in reality, because we all know that if you wanted to buy a German bond or Europe or ECB bond for like almost a decade, you had to actually buy the bond with the money. Let's say you wanted to buy $1 million. Let's say you're just Joe Sixpack and you wanted to buy $10,000 bond. Well, you would have to pay to buy that bond. So you give them $10,000 or 10,000 euros, and then you would have to pay them more because you bought their bond. So they don't pay you interest, you pay them interest. That's a normality for like the last 14 years. And just recently, finally, with 40-year high inflation, now they'll give you like 1.5%, 2%, or 3%, depending on the country in Europe, or 4%. But inflation is 7, 8, 9%. So are you making money? Are you losing money? This is a test question. You will all be graded on that one. If inflation is 7% and you're getting 4%, do you make money or don't you? Anybody can shout it out. I don't really care. But obviously I'll give you the cliff notes, and the answer is, yeah, you're losing money still. Okay? But let's talk about the ingenious, government policy of the central banks over there for a decade. They convinced you to put out 10,000 euros and pay them interest at the same time. You didn't get the interest. They got the interest. So when Doc goes on a rampage about understanding volatility and fundamentals and, all the other stuff, it's almost like a laughable thing. We should all be wearing like funny hats, blowing little horns out of our mouths, making noises. It's a circus act. It's a three-ring circus. So when you look at the VIX like that, you look at this VIX and you go, wow, okay, look at it drifting and drifting and drifting, and the world is kind of, on the edge of nuclear war / in the Central Europe, and, China is having capitulations about Taiwan, and, you have all these odd things going on that are not exactly the friendliest things for investments, and you look at it and you go, why is the VIX going down? It's, well, the central bank can easily do what it does to gold. It can knock the VIX down. And it does. Because what makes the VIX work? Those 6, I'm sorry, I apologize, using the word OPTIONS, options. Don't mean to use that scary word. Didn't mean to do it. I'm sorry again. But, that's what the whole logic of it is. They're only made up, the index is made up of that. And if they can fudge look at, if they can fudge the gold market where we're at 40-year highs and we're still 20% underneath all-time highs in gold, well, trust me, it's not that hard to fudge the volatility market. It's a piece of cake. Believe me, it's a piece of cake. So, and that is Doc's riff of the day. Ta-da! Boy genius. All right, from there, let's drift over to the dollar index and see what the currencies do. Oh, no, and let me just say this about that. Back in the old days when I was one of the, my operation was one of the biggest traders on the planet. We were the number one trader of what was a major stock at the time, IBM, in Chicago, and my volatility. When I followed, there was no volatility index back then. We had our own computers creating a volatility index on our own. They were trash 80s. If anybody out there wants to go yesteryear, Doc We just had trash 80s, Tandy 80s in the basement, churning away theoretical models every day. Reams of them. But in the end result is that there was no VIX index back then, and we were the largest or the second largest short position in the world in IBM all the time because we were maxed out on those scary words again, the OPTIONSs. We had limit up, or limit out every like half a dozen sorry, I have to use the option word again. STRIKE, strike. Yes, I know I shouldn't be saying it. But in the end result is that volatility can be manipulated very easily. Okay, it doesn't take much to manipulate it. And if they can manipulate gold, which we see they do, we know that gold doesn't make any sense. 40-year highs in inflation, and all they can do is get up to about 20. Well, matter of fact, it's even more insane. Let's look at the gold index, the gold contract. Let's go over to the gold contract. No more than 3 months ago, or was it 3 months ago? Even less. Back in October, gold was trading at 1650 with an all-time high of 2200. All right, the thing was down almost 25%, and we're at all-time highs, 40-year highs of inflation, and all gold can do is trade 25% underneath its all-time high. So when Doc goes on his crazy, I do wear tinfoil. I got tinfoil on my head right now. It stops out that messaging thing going on from the government. But when Doc gets on here and talks about manipulation and central bank manipulation to gold and option volatility, believe me, they're doing it. They have no problem doing it. And I can give you the legal rationale why they do it. And I mention this here on the webinars all the time. And that is because the manifesto of almost 99.9% of all hedge funds, mutual funds, retirement funds, those in corporations say that if gold goes to a certain price or if volatility goes to a certain price, they have to react. And what is QE? QE is quantitative easing. The objective is stability. And so they try to stop the wild markets. They don't want you liquidating. That's why Lloyd's of London is still Lloyd's of London. They don't want you liquidating. That's why Deutsche Bank is still Deutsche Bank, owned by the Federal Republic of Germany. Or Lloyd's of London is owned by the Exchequer in London. Or Citibank in New York City is owned by the Federal Reserve. They want stability. And they will do anything. They will manipulate gold. They will manipulate the VIX. They will do anything to keep that stability. And when you can print money till the cows come home, you can do a lot when you're capable of printing as much money as you want. They lend Citadel. Matter of fact, I just saw Citadel 2 days ago. One of the largest hedge funds in the world is building a building in New York City, so that big giant skyscraper, and they've just proposed it. And this way, they're going to consolidate all their employees into this big complex. And the Federal Reserve lends them $1 billion a night for free. And I put the list up on the webinars before. They lend $500 million here, $250 million there, every night for free. So in other words, imagine if any one of you listening to me right now, the Fed would hand you $1 million for free every night. They would lend it to you. And you can't spend it on anything but being long the market or putting an option. I used that word again. I'm sorry. A position on with equity. How's that? And locking it in like a reversal conversion. In other words, or a box or something. Just generate a small. If you make a 0.25 percentage point on $1 million, but you're not paying for the $1 million, then you make a 0.25 percentage point on $1 million. And that goes into your pocket. And that's one way of the Federal Reserve to, control the markets, because they're giving away free money overnight in a limited way. So, VIX, when you start to talk options to me and VIX, you get crazy Doc. Crazy Doc gets really nuts. So, I mean, it just sends me over the edge. Anyhow, let's go back to the currencies where it's nice and chill, where we don't have to talk about nasty words like those derivatives. All right, let's take a look at the dollar index. Let's see, where's the dollar index? Right there, that's the DXY up on J4X. Right, it's there. There it is, right there. And you can see it's still trying to, drag itself down. Of course, the dollar should go down in value. It's way overpriced. That was part of my craziness on Monday. And that was that fundamentals, what used to define how to buy a currency pair or sell a currency pair was usually through the fundamentals of GDP of that country and the opposite country of the pairs trade. Inflation, CPI, consumer price, PPI, producer price, all those things. Also, basically tax laws. I know you don't want to hear about politics. I get it. But, basically the king of it all was tax law, too. In other words, how much you had to pay on what you made and how much less you didn't have to pay in the opposing country for what you made. Things like that. So those fundamentals have been twisted and turned, and unfortunately, they don't actually do as well as the technical analysis does. Technical analysis seems to be ahead of the curve nowadays, which is enormously surprising, compared to the old days of fundamentals, which people, lived and died by fundamentals. And Janos can contest to that because he's made 2 or 3 videos telling everybody how fundamentals do not function correctly anymore to the fundamentals released in a 2-minute or 3-minute period, and it disappears. In the old days, before quantitative easing, fundamentals could go on for 2 or 3 days. In other words, data came out. They said X about Y, and money would slowly gravitate in that direction for a few days. Now it lasts for maybe 1.5 minutes to 2 minutes, and then gone. I hope I'm not sounding too crazy. Tell me if I'm sounding too crazy. If I'm sounding too crazy, I'll chill it out more. I got a baseball bat here. I can hit myself in the head for a little bit. From there, let's take a look at the dollar index on the CME. Let's see. There's the CME's dollar index right there, which is very interesting. I think it has one more currency. So it's the DXY with one more currency. I forget what it is. I can't remember. But I think it might have it might have the Australian dollar in it. That's what it is. So it has like the Australian dollar in it, and so it has like the the kroner and the Swiss and the yen and and although it has the British pound and the euro, and I think it has 1 or 2 other products in it, and I think one of them is possibly the Australian dollar. And you can see here it's trying to come up. You're looking at the weekly right there. It's trying to move up. You can see over on DXY, it's kind of flatlining, isn't it? Down here, it's trying to turn up on the daily. Same thing here. And then let's take a look at it on a weekly basis. The dollar index is right there. Dollar index is burying itself down below here. A little surprised, but you can see the green line is trying to get over. It's gotten over. It's fallen back down again. And it's right like smack dab next to each other, the slow and the fast stochastic. And then over here on Chicago Quant, you can see we are dancing our way up a little bit, but I don't think it's going to mean a lot. At one point, last week, we were in the, we were over the number. I think it comes down to more of the flat line. I think that's what that was all about, that box we had there at the time. How we kind of look at it and go, the currency itself, the index itself is not really that active. And you can see it's buried itself down at the bottom end of the range, and it's taking out these lows here. But overall, the dollar's going to have a hard time lifting. I think that pairs trades overall have a natural tendency that'll probably go up in value, and the dollar will go down in value. So, and that is pretty much the way we look at the currencies. And so from there, we go and look at the euro. Let's see what the euro is up to this morning. I know it's a couple days in a buy. Last we looked, let's put the daily up there, right there. And there is the euro, right? There's euro Turkish lira, euro dollar. You see that strength for the last couple of days. You can see it's kind of flirting with the high end of the range, with the green line above the dash line. And yeah, there it is right there up in that high area. And then over here, see, it's going like that. There it is. And there's the euro. Is that the euro? No, that's not the euro. Let's find the euro. Right there. There we go. There's the euro. And so you can see there, same situation. We're on a fifth day of a buy right there. Been in a weekly buy since the historic lows. And that action is pretty much the name of the game. I would assume that it'll drift in and out, but overall I would assume it'll just keep on trying to find ways to go up. I would imagine the only thing that can slow it down is some enormously bad news. At the moment, I don't see anything on the horizon more than what we all know and see. I don't need to reinforce what that was or is, but I'd imagine it'll just cruise along like that. From there, we go over to the British pound. Let's see what the British pound is doing. I'm putting a computer to sleep at the same time. One of them's just instigated to wake up accidentally. I must have hit the keyboard or something. There we go. And there's go to the British pound. And there's cable. And cable, same thing, showing strength here on the daily. And let's put it up over here. There is the pound there. You can see same thing, 4 days in a buy. A little pressure here. Look at that. What a crazy spike, huh? In other words, it's the math is looking at this and saying that it's too calm, I guess. At the same time, the weekly is still underneath right there. It's at least it's banging against the time manifold right there. That's a good thing, and maybe it'll get some, leg. If we get another lift on the upside here, it should start to lift up the weekly at the same time. Whereas the euro, as we just saw right above it, it's not giving up. It played with the sell a little bit last week and just said no thanks, and it's lifting back up again very comfortably. And then Swiss, you see the Swiss doing the same thing as the euro. It's holding on by the hair of its chin. You can see right. Let me just lift the line up a little bit. You can see it is so close. Me so close. Always reminds me of Star Wars. Jaja big. You can see here that the Swiss itself is just kind of, ever since the resolution of the problem in Switzerland a few months back, it's done a good job to get back into the rhythm with the other pairs trades. Let's put it up over here. And right there it is, Swiss. And let's take a look at it on the weekly too. The weekly is, like I said, ever since the resolution to the problem has really cleaned it up. It's kind of interesting how it helped the yen and the Swiss franc at the same time. Boy, that's a story. Wouldn't you like to be out drinking with some Swiss bankers and hearing all the rumors? There must be some really great rumors about that one. Oh my God, that could be pretty cool. From there, we go back to the daily, like so. And you can see it's got a green going on right here, same as us. You can see it's flirting through the zero line. You can see that right there. It's trading at 0.00073. Remember, my math, it was geared for quantum mechanics, so it does kind of turn some numbers into incredibly small increments. Let's see, what else? Then from there, I guess we go over to the yen, the other winner from the resolution that occurred. And it has the same pattern to it, the whole gig, it has that whole look to it. They were flirting with the buy last week, but that's straightened out. There's new lows there, of course. That's kind of cool. We were thinking we would see the 125 area, and we still may with us in that weekly sell. We just need another daily sell. We went into the daily sell here, and it's done nothing but go the wrong way. See, Doc can't be perfect. So we went into the sell right. It wasn't there. It was right there. So we went into the sell there. And the next day it was down a little bit. But today it's perking up and trying to get into the buy. So we might have a loss there. And if you were doing stops correctly and so forth and not trading those scary derivatives that I like to spell instead of say out loud, then obviously that would be the same thing too. In other words, then it's you're out of the position either way, and you did not make money. You did not. Can't win them all. We can only win 8.5 out of 10. As long as you follow the math, it'll keep you there. Always up 8.5 times out of 10. Not a bad thing and a percentage to play with. And so that pretty much leads us to one of the fun ones, our laboratory product, the Turkish lira. And it's dancing along the 20 area in a daily buy for the fourth day. And we're getting a red dot there, of course. It's been in that weekly buy since late October. That's kind of interesting. Let's put it up over here. Right. Is that it? No, that's not it. It's right there. There it is, Turkish lira. So it's over the 20 thing. You can see the lines really screaming through the top here. And a green line there. And what's that? That's the daily. And let's see the weekly. There's the weekly. Woo! Is that it? That's a hot rock. That's pretty cool. And that thing, look at that. And it got up here and it's just like banging at this point. That's the only downfall of any of these public indicators, that they're not able to be as dynamic as our situation, luckily, for me. And let's give it a little spinny spin. Where's that spinny spin thing? And straighten that out more. Right, where is it at? Right there. Yeah, that makes it look better. And now we'll widen it out. There we are. So it's been in the buy since that crazy volatility. And it's been just drifting up. And you can see it's trying to back down, but look at it's holding the manifold. And the manifold is widening. I mean, it's like, and as Robin was saying to a client a couple days ago or a week ago, the manifold gets tight. Look for action. And sure enough, that's where your action is. And that's where it starts. Let's see what else. I guess. So you can see here, it's trying to break down, and the weekly doesn't care. It's like a honey badger. It don't care. And that is that when it comes to the Turkish lira. I just want to look at the daily one more time. Yeah, 3 days in strength. Cool. And up at the top end of the range. All right, and then from there we go over to the two currencies that kind of match up to the commodity arena. We look at the Canadian, which we'll put up right here. Oh, not right there, right here. The Canadian, dollar Canadian pairs trade. And you can see it's, this is the daily, and it's been heading down. And you would assume gold normally would be going, not gold, I'm sorry, oil would be going up. So let's take a look at oil over here. Earl, right there. And, okay, so what's that, like 5-6 days, right? Dancing its way down. And you got 3, 4, 5, 5 days of it trying to, with higher closes. Just kind of every day was higher close, going up, up, and up, but not really moving that much. And I imagine this morning, just a quick look, we'll go back to it, but I would think Brent might be touching the 80 area again. Let's see, where's Brent at? There's Brent right there. Yep, 80, 89 now. It was back in the 79 area yesterday. So they're trying to lift this thing up. It's trying to lift with Canadian heading down against the dollar. From there we drift over to the South African rand, and we look at gold. right there. There's gold. And woohoo, it's almost $1,900. Woohoo, 1877. Wow. No inflation. Gas dirt cheap. Hooray. Food at the store costs nothing. Of course. That's the reality we all see, right? I see it, you see it, we all see it. And we put up this South African rand here. And South African rand, where are you again? Oh, we can close this. Bye-bye. And then the South African rand right here. There it is. And the South African rand, you know, it's got that, I hate to talk about politics and markets because most people get frustrated with that one too. Well, you can see here the daily is in a sell for a second day, which would insinuate strength in gold, but you can see here the rand closed up from 2 days ago, and today it's flatlined on it, you know, and you got this political triangle. Oop, I'm sorry to say those dirty words. Let's make it even larger. 20. There we go. Politics. Manangus. Let's see. Right there, and that's the South African rand. So let's take a look at gold. Like we have it up on J4X. You can see trading at 1876 now offered, not 77. See, no inflation. Why worry? Be happy, man. And you can see today they had gold up to 1890.9. Woohoo, going after that 1900 area. How about that? But look at our math. It's trying to roll over at the same time. You just have to scratch your head. Inflation. Oh, sure. You go to the store, you can buy so much more now with your euro. I mean, so much more. You need to travel in your automobile? You can buy fuel dirt cheap. Of course. You ever try to buy a pair of jeans? Pennies. Just pennies on a dollar. Yeah, no reason for gold to want to go anywhere. All right, and that is the currency pair of the. Unfortunately, this political stuff with the $500,000 thing going on with the president is really messing with our way we look at the South African rand against the metals complex. Obviously, there's something going on here. They're going to have to figure out one way or the other. I guess we should say politics $500,000. I think that's what we're going to do. We're going to change it to politics $500,000. Until they resolve that, I guess we're going to be trapped into. We'll know when it's over with, I guess, because what will happen is, the pair will work again correctly against gold. There we go. So once that, we don't see it in the news because they like to hide that stuff because he's part of the ANC or the Labor or. So he's a socialist, so obviously he's a good guy and the rest of the world's a bad guy. So would we hear more news about it? Just the one-day news and it's done and over with. All right, let's save that. And then from there, we drift over to the Mexican peso. Boy, are they making the jokes about that one. Because Trudeau is with the president of Mexico and so is Bozo, our clown, Biden. Presidente Biden, and so I think they're worried about global warming and discussing those things. So, or global cooling, I don't know, whatever they call it. So that's what the Mexican peso is doing, is coming after a couple year lows. They're pushing, and they're just sitting there. And you can see we've been in the daily sell, and we went into the weekly, but we'll see if that lasts and they don't turn it up. Maybe they bribe Biden. Biden, money talks with Biden. He likes money. Money, Biden. They call, what they call Biden and so forth over here? The Biden criminal crime family. That's what they call it. The Biden crime family. Now, you won't see that on ABC, NBC, CBS, CNN, MSNBC. They don't say that. But everywhere else, they call it the Biden crime family. They just seem to be taking in millions and millions of dollars. And the investigations are now just beginning since the Congress changed. They're going to deal with that. Not counting that top secret data that was just found in his office accidentally from from 2012 or something like that. I don't know. The Chinese paid for an office for him. They gave him $48 million, and he had an office in Washington. So he moved top security papers to it illegally. They're just starting to talk about that right now. That's can't make this stuff up. It's amazing. I could not come up with. You think I could? And you know, Doc can get crazy. I can't even invent in my head some of the craziest things they do. It just blows my mind on constantly. All right. So there is that. That is our currencies, and we're done with those. But if anybody would like to see a currency, just let us know, and we'll go check it out. Close workspace. Did that work? Let's try it again. Close workspace. There we go. Yes. All right. Now let's drift over to the rest of the metals complex. And that would be right there. Let's see how silver's going today. I saw it in a daily buy earlier. There it is. It closed in the daily buy yesterday on a down day, no less. I always like that one. That's a biggie with me. I love that. They're always like the great head fake. You get a down day and you go into a daily buy. That something like 9.9 times you buy it, you make money. It's amazing. Now, not for the whole day. Just, you'll be able to sell it out the next day or that night for a nice profit. And in this case here, they took it up from what was a settlement of 65. And yes, and today's high in this particular product is 24.19. So it went 35. So that went 54 cents up, half a dollar. So that's pretty cool. I know it's flirting with the daily sell now. We just need to get rid of the green and the red there on the volatility signal. And you can see here we are flirting just underneath the weekly, only by 0.07, minus 0.07. So just 7 ticks does it. We'll see. I mean, for that is. My math is doing all kinds of... My math looks like a wheel with a hamster on it. It's got all kinds of things going on. From there... We take a look at copper, which is, just totally... Oh! Remember yesterday I was talking about Alibaba and Jack Mu, however they say his name? He's on the lam. Maybe they listen to me. You think they listen to me? He's on the lam. Yeah, he's taken off. The government took 93.8% of his company. So the government, the company that he created... They've come in and taken control of, they say they own now 93.8, but they didn't give him any money for it. They just told him that's what and they said, you can keep 6.2% of the company, but we want you to come home too. You got to come back to China. So he's out on the lam. He disappeared for 9 months at one point, so they probably were trying to re-educate him. They put him in a camp somewhere to try to re-educate him. And I guess it didn't take, because he's on the lam. He's like, I'm out of here. So I guess he's going to be a boat person. And as you can see here, copper is climbing nicely right back into the weekly buy too. And this baby is lifting. This is like the best product to trade if you think China is doing good. You want to buy this. Doesn't matter if it's doing good or not. But if you think it is and the media keeps on telling you it is, well, that's really good product to trade then. All right, and last but not least, we'll go over to the platinum. And there's the platinum. And it's been in that daily buy now since here, back in December 20th. In the $1,000, $21, that $1,021.10. And it zigzagged around a lot, tried to scare it away there. Tried to scare it there 3 days ago on Monday. And here we are trading at right now at $11,010.80. So that's a 10% move, even better really, but right around a 10% move. Not bad, huh? And it's still in that weekly buy now for our 4th week. It makes me feel that, Well, we know. I was thinking about gold and silver yesterday. I was fantasizing about it somewhere along the line, and I had to, I just was daydreaming about it, thinking about could gold go up to like 3 or 4 thousand and silver only go to like 60. I look at the Bitcoin. I'm really convinced. I'm not sure if I can justify my statement, but I can say this about that. And I like to quote Richard Nixon. Let me say this about that. I'd like to be perfectly clear. And here is Bitcoin. And, we got this box in here since, the FTX crash stuff. And you can see we've been in a daily buy since here, and it just keeps on holding up. And so, I mean, percentage wise, obviously Bitcoin's moving better than gold has moved over that same 2 week period. Um, what else do we got going on? I guess, we're in that weekly buy here. That's pretty cool. So I really think, you're looking at 17,500 basically on Bitcoin. And you have to really wonder, is gold worth half of that? Is gold worth a quarter of that? Without government, with less central bank influence, what is really the fair value? I was rambling about this on Monday too. What is truly the fair value of gold? Really, I mean, I'm convinced it should be much higher than where it's at now. But when you have central banks controlling this stuff and keeping it under a certain price range so it doesn't influence everything else, wreck the stability. I guess that's what it is. Wreck the stability. I mean, that's what it really comes down to. Is I think that's what the real answer to all of it is. Really, is that they what is the real fair value? What is the real fair value? And I look at that price tag there at 17,460. So I'm rounding it out to 17,500. Is gold worth half of that? Is gold worth a quarter of that? I would think it is. I mean, honestly, I would think that, in some fantasy idea in my head, gold is probably worth at least $4,000 to $8,000 an ounce. I would think that. But what that would do to the equity markets and the funds across the planet would devastate them. That would just devastate them. They would get crushed. Doesn't matter how much they own. They would still get crushed. Because they would have to be liquidating assets like, Amazon and Microsoft and so forth. They'd have to shrink their portfolios dramatically with that price increase on the gold. So, it. But I've come to a conclusion. I'm really convinced that watching Bitcoin is the real truth to what gold should be. Then I was thinking, well, if could gold really explode over time and get up into threes, fours, and what would they do to silver? I'm not sure if I'd see a $200 silver. I'm not convinced of that. Maybe some panic move over a 4 or 5 month period, money would be coming in, but they would get it to 200, and then they would probably smack it back down to like 90 or 75 or something, just the way it is now. When you look at silver. I mean, really, it's flat. It's underneath $24 as we speak. It's like, oh, okay. You got all this crazy inflation going on. You got a war going on in Central Europe, and you would think gold and silver would find a much higher price tag. Nope. All right. From there, we'll go over to the energy sector. Unless someone has a question for Crazy Doc. Am I missing questions? Am I not seeing questions come up on the screen or something? What's going on here? It's quiet. Maybe I should give it a refresh. I can't believe I haven't seen. Last thing I see is a metho with a thumb up. Am I missing questions? Let's see. No, I still see I refreshed it and still says metho with the thumb up. Okay. All right. Maybe I'm sounding too insane today. And that's because this is all a fantasy and I am just living in a nursing home at the moment. And there isn't anybody around really listening to me but me mumbling to myself. From there, we drift over to crude oil, and we saw what Brent was doing. Brent is hanging out up in the 80 area, which is pretty cool. I was saying to Robin yesterday, we're going to go to natural gas in a few seconds, but here is the February contract trading at 76. It's trying to climb, and then we go over to the back month. Oh, look at that! Brent is at 81 now. It's over 80. Cool. And then the back month, with the front month trading at 76, we'll say 76.20. Let's call it that. We see it's 76, 75 now, 70, 69. It's trading 60. Is that 17? So it's trading 50 cents over, 52 cents over, something like that. Yesterday it was almost up to 70 cents. You see it's climbing back into the weekly buy right there in the back month. Is the front month doing that too? Yeah, but front month is doing the same thing. Let's see what Brent looks like on a weekly basis also. I don't think it ever went into the weekly sell, the Brent. Oh no, it's in the weekly sell for a couple of weeks. Okay. It'll flip. It should flip with the way this action's coming. And then we go over to natural gas. Right there. Robin and I were talking about natural gas yesterday. I was saying to him, natural gas is still almost 200%. Let's see if we can show it to you on J4X. Let's go to right there, natural gas. We got the weekly up there. And yeah, there we go. There's the low of, what's that, 1.3, right? And that's no more than 3 years ago. What's that? That was in 2019 in June. So it's like three years in June, and so 20, 21, and 22. So it's 3.5 years ago. Okay, 3.5 years ago it was trading at 1.3. And I said to Robin yesterday, because we know somebody that's involved in the natural gas complex, and I said to Robin, I says, mention it to him that right now natural gas is trading almost 200% over its lows of the last couple of years. It's more than a couple, of course. It's 3.5 years, but it is trading at 338. It was down to 131. So, trying to bottom fish in there, our math is screaming at us. You can see it here. Let's see, where is that? Right there. You can see, we've been in a sell since what, the $10 area? That's the $8 area. But I think we went into a weekly sell up in the $10 area too. Let's see, let's tighten that puppy up. Yeah, we went into a weekly sell that's the $8 area. That back month never got up into the $10 area. Only the front months did at the time. Okay. And so when we look at natural gas here, you can see back in, what was that, August of, was that 22 or 21? Yeah, August of 22. So in August of 22, which is right here, all we were is in the $8 area, and there was the $8 area again. So, it wasn't in the $10 area like, the front months were. And, so, it's dropped 70% in value from the front month contract. And I said to Robin, I said, tell that trader that, it could go down another buck with no problem. When you really think about it, it's 200% above its 4-year low. That's 200% means something. Obviously, yeah, it went up, what, I don't know, 1,000%. Basically went up almost 1,000% to the spot contract, or 900 and some odd percent. But in the end result is it's still 200% above it. Anything's possible. And we have tons of natural gas, and so forth. And now times have changed again in the government. I know people don't want to hear about politics, but things do change when different people with different perspectives take control. So from there we go over to the a energy company in Spain. Let's take a look at that. That's usually the only way we can view the the market in Europe. I must have scared you all being crazy today, talking about volatility. There it is right there. The Spanish oil company trading in the 26s. What happened there? What's that all about? Weren't we just down in the 24s a couple days ago? Oh, that's the weekly. Let's put the daily in. So we'll be able to see the action better. Yeah. 4 days ago, we were at last Friday, we were underneath, almost touching 23.99 or something like that. 24.02 or 3 or whatever that is. And now we're at 26. What I guess I don't know. What happened? What changed the complexion? Not sure, but I'm sad to see it. I would like to see Europe paying less. That's that inflation thing that no one believes in anymore. All right, and so there's that's the natural gas situation. We'll take a look at the stock indices, and then we're going to get out of here. And there is the S&P 500 right there, the world index, and trading at 3955. Nice. It's up about 20 points from yesterday's. Is it 20 points? No. Yesterday's close is 41. So it's 14 points above. You can see the weekly is trying. You can see the fast weekly is already above it. That's the dotted line. That's the fast, which I like watching more than I like the slow one. But we have to figure a way of reintroducing it that way. I haven't figured that out yet. So we'll just leave it up on the screen. But you can see the fast jumps up a week ahead of time compared to the slow right there. And you can see it breaks down right here almost a week ahead of time also. It's definitely faster. And you can see it jumped into the weekly buy last week here on the fast. And that's that little dotted blue line. And, it's sure enough a strength. That's why I came in long on Monday. From Friday close, I was long then. So, what else can we say about any of that? I guess that's about it. There doesn't seem to be any questions after Doc went nuts on the volatility. And what we will do is we will be here tomorrow if my nurse lets me do that. And so, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Ta-ta from now. Ta-ta from now. Doc over and out.